Very good morning, everyone. This is George Beyrouthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And I will show you today what happened over the last week and what we expect this coming week. And by the way, if you like this presentation, you can always send us a feedback and tell us how you like it or may dislike it. First of all, let me start with the volume. You can see that volume has actually really increased over the last 5 trading days. However, over the last 5 trading days, there were 2 advanced and 2 declines, or actually 3 declines. So the market is actually at the moment waiting for the outcome of the election, but it's very important to see that the volume has increased. And over the last 10 weeks, we've had the last week in total, actually the declines were more than the advanced. All right, next one, we start with our forecast from data that we have collected over the last several weeks. And this is actually the result of the last week, which actually the indicators giving us some indication what we expect this coming week. So the American market, especially with the S&P 500, is still very, very strong. The Dow Jones with the top 30 stocks have actually gone from bullish, bullish, neutral, bullish to bearish. So it looks like the very big multinationals, the one that export the most, may be suffering because of the trade imbalance between China and the world and America. However, the remaining, I guess, the other 500 companies, they're still very strong. Gold is now into bearish territories and silver in neutral. If you look at soy, which is an important part of the trade discussion between America and China, has actually gone bearish for the number of weeks. So China is buying less soy from the United States, ready to actually retaliate against any sanctions or any imposition of tariffs. The Australian dollar is bearish, as you can see that. The last 2 weeks we've seen bearish indications. The euro is going more bearish, and the American market has gone from very, very strong to still very strong, with just the conservative trader as neutral. So for the long term bullish, for the very aggressive bullish. Now we look at the chart, we can see here the American market before Christmas had a big drop and recovered most of it back, but hasn't really gone back to, that's the Dow. The Nasdaq, the S&P 500 went back to where the all-time high, but the Dow has not. In terms of, that's the weekly and that's the daily. Updated this morning, by the way. So we can see that the market here, the parabolic stop and reverse, bearish. The stochastic slightly bullish, but we can see that the 50-day moving average is above the 100, above the 200 and above the 100. However, the 100 is below the 200. We actually put a lot of emphasis on the 200. Since the market went above the 200, you can see exactly what really happened, continues to go higher. And until it gets very close to the 200 and goes below it, we are actually reasonably bullish on the American market. Coming back to our market, these are the sectors. The financial has picked up a lot of steam. The all ordinary and the 200, bullish long term, and for the very aggressive, again bullish. Telecommunication has gone slightly neutral from 3 bull to 2 bulls. Consumer staples, this is Woolworth and Wesfarmers, very strong. Industrial, very strong. And gold, bearish, as you can see here. But the financial is very, very strong. Now, what happened on Friday in terms of the various sectors? Consumer staples, it had a very good day on Friday. Information technology, again, not very strongly, but still on the green side rather than the red side. energy, gold, real estate, resources, and even though the financial looked very bullish, it had a very slight drop on Friday, but I wouldn't worry too much about it. So in terms of the extremes, energy over 1% drop, gold more than 1% drop on one day, and all the greens happen to be below the 1% rise for one day. In terms of companies, you can see here that the banks ANZ bullish for 2 weeks in a row, CBA very bullish, Macquarie Bank has actually gone bearish because of a drop of 5% on Friday, but NAB bullish and Westpac bullish. Westpac came up with the results, and the results this morning were not very good for Westpac. In terms of very bearish, we have Worley Industrial bearish. You want to go bearish on Worley, and maybe on TPG has gone from bullish for several weeks into bearish. Telstra slightly less bullish than before. Maybe we've reached the top. QBE very bullish, and CBA and the banks very bullish. I showed you the weekly. Now this is the daily. You can see here that BHP is bearish, but the banks had a good day on Friday. CBA, QBE. I mentioned that Macquarie Bank had a big drop on Friday. So what happened in terms of the companies? The XJO, which is ASX 200, was almost neutral, hasn't done a great deal on Friday. ANZ was up 0.5, BHP down, QBE 1%. The best performing Wesfarmers, I told you that consumer staple was strong. You can see 2.02% rise Wesfarmers and nearly 2% on Woolworths. So based on Friday, you will continue to buy the consumer staples companies such as Woolworths and Wesfarmers, and you continue to move into the banks as well, with the exception of Macquarie Bank. It dropped $7 on Friday. Okay, in terms of the most active, these are companies that you may want to have a look at for the very aggressive traders. So that's not really something that I wouldn't recommend for the very conservative investor. Again, this chart shows you the 52-week high and the 52-week low. Again, we only like to concentrate on the companies that have got big volume. And you can see here that in terms of big drop, BC Iron and ASX, E2 Metals. These are companies that you don't really had big volume, but they had a drop. They reached the 52-week high, but still a drop on Friday. Anyway, if you want to talk to us about these companies, all you have to do is call us. Now, I want to talk to you about Flight Centre. It's a company that we traded sometimes in March early. We were actually to enter the market at 45.12, and we relied on $2.09 dividends that was paid here, down and then up pre the X date. And then after the dividend was paid, people decided to dump it. Recovered, and then we actually had bought the initial one at $45.12, bought some more about 4 weeks later at $43.05. Our average ended up at 44.09. And looking at the chart at the moment, we've had a big drop a few days ago because Flight Centre decided that because of the drop in the leisure market, their expectation, instead of making $390 million profit, it dropped to $300 profit. That's the revenue, sorry. So at the moment, we are in 6.6% loss in 11 weeks. We were actually sitting on nearly 5% profit a few weeks ago, but now unfortunately, and we've decided we're going to we hang in there, and hopefully it will recover slightly, and we may even actually average our trade and buy some more. We've gone into another trade here. As you can see, we've gone into the XJO, and this is a trade for one of my clients, with as long as the market does not go higher than 6450 and does not go below 6250, small profit for our clients. At the moment it's sitting at 6341, and that closes on the 9th of May, which is only a few days to go. So let's cross our fingers, and hopefully the market will not really shoot up a great deal. The fact that America has announced this morning that they will impose 25% tariff on some of Chinese tariff, we might even see that the market drop today. Okay, because I don't know your financial circumstances, this is our disclaimer. All you have to do, go to our website to read it, and if you don't have any questions, all you have to do is call us, or you send us an email at george@fssecurities.com.au. Happy trading, and enjoy your week.